Far end, I'm more optimistic about markets, but I think it's largely dependent on how markets perceive what the Fed is doing. And I'm just going to emphasize again, Fed's been very aggressive. They've been using the word expeditious, meaning they want to really tamp down inflation. But as many of our clients know, in the last couple of weeks, the soft surveys and leading indicators have all started to turn down for inflation. And we're already seeing the Fed talk less about expeditious and more about measured. I don't think they're at that point yet.
I think a lesson that Jay learned also from the Volcker years, and I worked with Jay when he was in the Treasury Department, is not to surprise markets. I think Volcker liked to surprise markets. I think Jay does not want to surprise markets.
Looking at three variables: dollar, oil, and interest rates.
Earnings are lackluster now, but it's not a disaster. It's not that this is not COVID, this is not the tech wreck, not the financial crisis, where we're expecting earnings to fall 20, 30, or 40+% from numbers. It's just recalibrating, lowering of expectations, really.
I think to get back to being fairly valued, the market would need to fall into around 3,650, 3,700, that range.
So where do you think leadership or signals is going to come from? Is it Bitcoin, Ethereum, or Solana, or some combination?
I think we're going to get a lot of selling pressure, on rallies from miners, and so the leadership might actually come from, some of the alts.
I still think that this is part of a base building process, and we likely are going to have a challenging few weeks before we can officially bottom out.
That you think is a natural pair? If you thought energy in the short term could be cooling or get more selective, what would you be overweighting?